Good morning, everyone, and thank you for joining me today. We're going to dive into a comprehensive overview of audit evidence, exploring the various types, sources, and methods of collecting it. We'll also discuss its reliability, how it should be documented, and ultimately, how it influences the audit opinion. I'm excited to guide you through these key aspects that are essential for a thorough and effective audit process. Let's get started. When we talk about audit evidence, we're referring to all the information that auditors collect during their review process. This evidence forms a foundation for the audit opinion they ultimately express. It includes every piece of data and detail that helps auditors draw conclusions about the financial statements and the assertions made by management. In simple terms, audit evidence is a proof that auditors use to confirm that the financial reports are accurate, complete, and valid. Without solid evidence, auditors wouldn't be able to reliably support their findings or give a trustworthy audit opinion. When we talk about types of audit evidence, we're referring to the different forms of information auditors gather to support their findings. First, there's physical evidence, which involves inspecting tangible assets like inventory or fixed assets to verify their existence and condition. Then we have documentary evidence, which includes important records such as invoices, contracts, and accounting documents that help confirm transactions and balances. Testimonial evidence comes from statements made by management, employees, or even third parties, providing insights that documents alone might not reveal. Analytical evidence involves reviewing financial ratios, trends, and comparative data to identify any unusual patterns or inconsistencies. Lastly, electronic evidence consists of data and logs extracted from IT systems and electronic records, which are increasingly important in today's digital environment. Each type plays a crucial role in forming a comprehensive audit opinion. When gathering audit evidence, it's important to consider a variety of sources. First, we have internal sources, which include company documents, accounting records, and internal control reports. These are vital because they come directly from within the organization and help us understand the internal processes and controls in place. Next, there are external sources of audit evidence. These consist of confirmations from banks, customers, regulatory filings, and other third parties. This kind of evidence provides an independent perspective, which helps verify the accuracy and completeness of the information obtained internally. Physical inspection is another key source. This involves actually examining assets and conducting inventory counts to ensure their existence and condition. It provides tangible proof that supports the financial records. Finally, electronic systems play a crucial role as well. Many companies use ERP platforms and specialized financial software, which can generate reports and data that are useful for audit purposes. These systems often enhance the efficiency and accuracy of audit evidence collection. Together, these diverse sources help us build a comprehensive and reliable body of evidence to support our audit conclusions. When collecting audit evidence, there are several key methods we use to ensure accuracy and reliability. First, inspection and observation play a big role. Inspection involves directly examining records, documents, or physical assets to verify their existence and condition. Observation, on the other hand, is about watching processes or procedures happen in real time to see if they're being carried out correctly. Next, we have inquiry and confirmation. Inquiry means asking questions to management or staff for explanations or to clarify any uncertainties. Confirmation takes us a step further by obtaining direct verification from third parties, like banks or customers, to validate information without relying solely on the client. Finally, there are recalculation, reperformance, and analytical procedures. Recalculation helps us check the mathematical accuracy of documents or records. Reperformance means independently repeating procedures to confirm the results are consistent. Analytical procedures involve evaluating financial information by looking at ratios, trends, and other data patterns to identify anything unusual or unexpected. Each of these methods helps build a strong, trustworthy base of evidence for the audit. When we talk about audit evidence, two key concepts are essential: sufficiency and appropriateness. Sufficiency refers to the quantity of evidence we gather. We need enough evidence to confidently support the conclusions we reach during the audit. However, it's not just about quantity. The evidence must also be appropriate. This means it needs to be both relevant to the specific audit objectives and reliable, so we can trust its accuracy and source. Together, sufficiency and appropriateness ensure that our audit conclusions are solid, well supported, and defensible if ever challenged. Balancing these two aspects is critical to conducting an effective audit. When we talk about the reliability of audit evidence, there are several key factors to keep in mind. First, the source of the evidence plays a crucial role. Evidence that comes from external parties is typically more reliable than evidence generated internally. This is because external sources are independent and less likely to be biased. Next, the nature of the evidence matters. Original documents are far more dependable than copies or reproductions. Originals reduce the risk of alterations or errors, so they provide a stronger basis for our audit conclusions. Then, we consider the impact of internal controls within the company. If the company has effective controls in place, the evidence it produces internally gains greater credibility. Strong controls help ensure the accuracy and integrity of internal data. Timing is also important. Evidence that is recent or up to date generally offers more relevance and trustworthiness than older information. This timeliness helps ensure our audit findings reflect the current situation. Finally, it's important to underscore that reliable evidence is essential because it directly boosts our confidence in the audit conclusions. The more trustworthy the evidence, the more confident we can be that our audit results are accurate and well-founded. When we talk about documenting audit evidence, the first thing to understand is the importance of proper documentation. This means not just making notes, but recording summaries and keeping copies of all the supporting documents. It ensures everything is clear and verifiable. Next, during the audit, it's essential to carefully record the procedures performed and the results of any tests. This helps track what was done and the conclusions reached at each step, maintaining transparency throughout the process. Finally, all this information is compiled into working papers, which serve a vital purpose. They create a clear audit trail that backs up the audit opinion given. Beyond that, these working papers are invaluable references for future audits and important quality reviews, helping maintain consistency and reliability over time. Audit evidence is absolutely crucial throughout the audit process. First, it serves as a foundation for evaluating whether the financial statements are free from material misstatement. Without strong evidence, we can't reliably determine the accuracy of the financial information presented. Second, sufficient and appropriate evidence is essential for issuing a valid audit opinion. If the evidence is lacking or inadequate, the auditor simply can't provide a trustworthy opinion on the financial statements. Lastly, audit evidence supports the auditor's professional judgment and conclusions. It underpins every decision and assessment we make from start to finish, ensuring our conclusions are well-founded and credible. So, evidence isn't just a formality, it's the backbone of the entire audit process. When we talk about audit evidence, it's important to understand the different types that auditors rely on to form their opinions. First, we have financial documents. These include bank statements, which show the cash balances and all the transactions that have taken place. Invoices and receipts also play a crucial role because they provide proof of expenses and sales, helping to verify the financial activities reported. Next, verification records are key. Contracts and agreements are used to confirm any commitments the company has made, while physical inventory counts help auditors ensure that the stock actually exists as reported. Additionally, confirmation letters from customers or suppliers serve as external proof to validate balances or transactions. Lastly, internal and electronic evidence helps substantiate the internal control environment and the accuracy of financial data. Internal reports and account reconciliations check for consistency and correctness within the company. Minutes of board meetings are valuable because they capture important decisions that could impact the financial statements. And electronic system logs track transactions and access, offering a detailed trail that auditors can follow to detect any irregularities. Together, these types of evidence provide a comprehensive and reliable basis for the audit process. When gathering audit evidence, several challenges can arise that make the process more complicated. First, limited access to information can pose a significant hurdle. Sometimes, auditors may not be given full access to all necessary records, which restricts their ability to verify details thoroughly. Another critical concern is management bias. There's always a risk that management might intentionally withhold information or present it in a way that favors their position, which requires auditors to remain vigilant. Additionally, the accuracy of records is not always guaranteed. Incomplete or poorly maintained records can lead to difficulties in drawing reliable conclusions. We also increasingly rely on electronic evidence, which, while useful, is vulnerable to manipulation or technical issues that can compromise its integrity. Time constraints present another challenge, as auditors often have tight deadlines that limit the depth of evidence collection and the extent of testing they can perform. Lastly, complex transactions can be particularly difficult to audit. Their complexity can obscure the true nature of the transactions, making verification and validation more challenging and requiring a more detailed approach. All of these factors must be carefully managed to ensure that audit conclusions are well-founded and trustworthy. When auditors form their opinions, the first critical step is to evaluate both the quality and quantity of the audit evidence they've gathered. This evidence basically forms the foundation of their conclusions. Without strong, sufficient evidence, their opinion wouldn't be reliable. If the auditor finds that the evidence is adequate, relevant, and reliable across the board, they can confidently issue an unqualified or clean opinion. This means the financial statements are presented fairly, without any significant issues. However, if the evidence is lacking or inappropriate, the auditor may have to modify their opinion. This can range from a qualified opinion, where some issues are noted, to an adverse opinion, indicating serious problems, or even a disclaimer if they can't form an opinion at all. Essentially, the more severe the evidence deficiencies, the more serious the modification in the auditor's report. When we talk about audit evidence, it's crucial to understand that it forms the very foundation of our audit conclusions. Without solid evidence, we simply can't support our findings confidently. Now, the evidence we collect needs to have certain key characteristics. It must be sufficient, meaning there's enough of it to support our conclusions, appropriate, which means it's relevant to the audit, and reliable, so we can trust its accuracy. Another critical aspect is documentation. Keeping thorough and comprehensive records of the evidence gathered not only supports our work, but also provides a clear trail for review and verification. Planning plays a major role as well. We need to strategically gather a diverse range of evidence types to cover all relevant areas, and throughout the process, we must maintain professional skepticism, always questioning and critically assessing what we see and hear. Lastly, verification is essential. Wherever possible, we should independently confirm the information we receive to enhance credibility. And let's not forget the power of technology. Using advanced tools can make collecting and analyzing evidence more efficient and effective, ultimately strengthening the audit process. These best practices together ensure a robust and reliable audit outcome,